Is the market about to collapse, or is this the biggest buying opportunity in months? Today, we're going to cut through the noise. I'll show you why Poland is buying tons of gold, what the US government shutdown really means for your portfolio, and why I personally just sold my Tesla shares. Bitcoin is dropping, and analysts are panicking, but the data shows big players are buying this step. Stay with me to understand what they know that you don't. Let's start with Bitcoin. It's down. The headlines are screaming crash. But if you look at the chart, this appears to be a normal retracement within a larger uptrend. It's a healthy pullback. A retracement is just a temporary price dip against the main trend. Think of it like taking a breath before continuing the climb. While many are selling in fear, long-term believers are buying. They see this as a discount. The key thing to watch? A big block of sell orders on Binance around the 105,000 level. We need to see how the market reacts to that wall. For now, this dip is just business as usual for a bull market. Now, let's zoom out from the charts to what governments are doing. The Polish central bank is buying gold like there's no tomorrow. Why? They're not doing it for short-term profit. They're doing it because they're losing faith in currencies like the dollar and the euro. They literally stated that gold is the only truly safe asset. This is a massive red flag about the stability of our entire financial system. This is a long-term play against a potential collapse. If they're right, gold's price could target $10,000 in the next 5 years. It's a huge vote of confidence for hard assets like gold and, in the long run, Bitcoin. If you're finding this analysis useful for connecting the dots, take a second to subscribe to the channel. It's free and you won't miss these critical updates. Speaking of unstable systems, let's talk about the US government shutdown. You'd think a shutdown is bad for markets, right? Chaos, uncertainty. Wrong. Paradoxically, it's been bullish for speculators. Here's why. The shutdown slows the economy. Job cuts are hitting record highs. This pressures the Federal Reserve to stop raising and eventually cut interest rates. Lower interest rates mean cheaper money, and when the shutdown finally ends, the government will flood the system with liquidity to catch up on spending. Where does all that new money go? Into assets, stocks, gold, and Bitcoin. It's a strange world where government dysfunction can actually pump the market. But this pump has a dark side. The market is getting expensive. Warren Buffett's favorite indicator, which compares the stock market's value to the country's GDP, is screaming overvaluation. It's at levels we saw right before the 2022 bear market. The economy feels like a Jenga tower. One wrong move, and it all comes crashing down. And that brings me to my personal decision. I sold my Tesla shares. A viewer, Sebastian, also mentioned he was moving away from them. It's about reducing my exposure to high-risk assets in what feels like a very fragile market. This leads me to where the real opportunities and risks are right now, company by company. Let's start with the AI race. Apple isn't building its own AI from scratch. They're reportedly in talks to license Google's powerful AI model to supercharge Siri. This is a bullish sign for both Apple and Google. Snapchat is another AI winner. Its stock soared after a partnership with Perplexity, making a smart move in the AI chatbot space. Chip makers are also recovering. AMD had great results, and that pulled up others like Broadcom and even NVDA, which is starting to bounce back. On the losing side, look at Diageo, the company behind Johnnie Walker. Their sales are tanking because demand in China and the US is weak. This is a powerful signal about the consumer. If you want to know how the average person is really doing, don't listen to politicians. Read the earnings calls from companies like Chipotle, Booking, and Kava. They reveal the true state of the economy. So what's the takeaway? The market is sending mixed signals. We have a short-term liquidity pump clashing with long-term bubble warnings. The key is not to follow the market, but to use it. Understand the forces at play, central bank moves, government spending, and real consumer health. This is a time for caution, but also for spotting the real trends, like the AI revolution and the shift to hard assets. Don't forget to subscribe so you can stay ahead of these market shifts with me. Now, I want to hear from you. What's the one stock you're watching most closely right now, and why? Let me know in the comments below.